Hey guys, what's up and welcome to a new Tesla update video. So today, let's go over Tesla and let's go over the market. It was a pretty big day, not a lot of movement as I expected, but nonetheless, still a pretty big day. We had FOMC, the actual meeting itself with Jay Powell's interview, and of course the actual rate hike decision, which of course was as expected, a raise of 25 basis points. Now, all that being said, let's jump into it. Let's discuss and figure out what has happened and what we can expect moving forward. So if you enjoyed, don't forget to hit that like button. This is not financial advice. My membership section on YouTube is live down below where I share my intraday thoughts on Tesla. So if you're interested in hearing what I think about Tesla and how the stock is moving as it happens throughout the day, the link is down below for that as well to join if you wish. Now, moving into a Tesla looking like it's going to be closing in just about 8 minutes or so here, but not looking too great, right? Look, closing down about 0.6%, we'll say on the day, which again, compared to the market, QQQ down about 0.5%, SPY down about 0.2%, kind of in line, maybe ever so slightly outperforming, but pretty much in line with the market. Now, the question, of course, is as follows. What does this mean moving forward? Now, and I've talked about this, of course, as usual to my subscribers, pretty much as it happened, but we talked about, so several days ago, I said how, even especially when it was down here, I said how I think Tesla can go up to about $275. We went to 273, just about, which is only $2 off. So that, like I said yesterday, could be the pretty much all that we get for the rally. And so far, that seems to be holding true. The most important thing to pay attention to right here, right now, is of course going to be this 21 EMA right here. So as you can see, pretty much this whole time as we were rallying upwards and had this massive rally, right? The second it broke above, you can see we started this phenomenal rally, right? And the 21 EMA is pretty important, right? Now we, of course, finally broke below it on this massive candle just post earnings. And not only could we not hold it, but we are closing candles below it, right? We had one candle right here that closed above it. I talked about how this wasn't a very convincing close to me because it's just ever so slightly above it. It's not too, crazy. And then, of course, following the next day, we had the rally to 273, almost to my price target, closed below it. And now we're, of course, once again coming up to that 21 EMA today, retested it, that 21 EMA and the 267-ish level, which is this line right here. Very crucial levels in my book. And we rejected at both of those levels. And it is, of course, now acting as a resistance. And that's not what you want to be seeing. Now, again, as usual, I do have that 2 to 3 day rule. So essentially, the way I look at it is if Tesla cannot close above the 21 EMA and or $267-ish per share tomorrow, this is where things can start getting a little bit worrisome for the bulls, at least for the short term, right? I do believe that this is going to be, a bit of sign of caution or potential trouble moving forward. Like I said, many times as well, August is a pretty neutral month for Tesla. I mean, ever so slightly more positive than negative, but, August, again, pretty much a coin flip month. However, September, October, pretty much Tesla's worst months throughout the whole year, right? By far. So keep that in mind. And then November, one of the best months for Tesla as well. So I do believe that pretty much moving into moving into August, we're going to get potentially not a whole lot. If not, maybe that will be the drop. But I don't expect too much to happen August and September in terms of bullishness, right? I do expect it to be flat, if not to the downside, probably to the downside. But I do believe that we'll overall find a base there, kind of go sideways as we form the base, probably September into October. And I think moving into November, of course, going off of the seasonality here is where we'll get that nice little rally, right? And I think that's where we'll find that base. So for instance, just to give you a rough example of what I foresee happening. Again, this isn't to the T, this isn't to that, specific price level. This is just kind of a rough idea as to what I expect to happen. And this is exactly what I drew like about 3 days ago or something like that, back when we were falling off a cliff over here. I'll do it again, right? This is kind of exactly what I said. I said how I expect the move to go up somewhere to around here, right? We go from here to here. And then how I, actually, you know what? Let me do it on, let me not do it on this. Let me do it with this instead. It's a bit easier to see, right? How I expect the move to go somewhere around to 275. I had it all the way up here, right? We came up pretty damn close to it, right? From down here is where I showed it. You can check the video. And then I said how I personally expect an overall rejection there, and I expect a move down at least to $240. Like, I'd be pretty surprised if we do not come down to about $240, but I also would not be surprised at all if we come down closer to the 220, somewhere around here. And I think from somewhere around down over here, we'll kind of get an overall base. We'll kind of, we'll chill. And then from there, I think we'll ultimately get a massive rally well into the 300s, closer towards the end of the year. Like, I personally think it's happening. Don't get me wrong. I'm still overall bullish on Tesla. I'm just short-term bearish for now. But I do think probably somewhere around November. It could be a little bit earlier, it could be a little bit later, but somewhere around November is where I think that we'll start getting that next leg up. I think that's when we're going to start potentially, you know, knocking on the door of 300, and that's where I think we'll also go ahead and breach that level as well. So if I zoom out a bit here, you'll see those. Let me remove the 21 EMA for now. Right, the overall red trend line, right? Keep in mind, and I said this many times, especially on the weekly, right? We did not retest the blue line. Or I have to redraw on the weekly. I don't have it on the weekly, but we did not test the blue. Is it this one? Still kind of learning this platform a little bit, right? We could do something like this, I guess, right? It's not close enough. But the point is like, you know, roughly, we never retested this breakout, right? We broke above it, this massive resistance that we had also that acted as a resistance. We broke above it and we never actually retested it, right? So keep that in mind. That's still something I personally expect to happen, right? And that personally, if that were to happen, it would take us to about $210 about per share, which I don't think is impossible. The daily is still looking bearish to me. Just an extremely obvious bearish divergence. Again, as the RSI is essentially making lower lows, lower highs, the stock is still technically making higher highs, higher lows. Even after this drop post earnings, we're still technically making a higher low, which is great to see technically. However, unfortunately, the RSI is showing a completely different picture. And like I told you guys many, many times, especially when we were still all the way up here trading at these elevated levels all the way up here, I told you how, you know, it takes time. Like the RSI, especially on the daily, it is a lagging indicator. It will take time to play out, and it doesn't happen, you know, over the next day or even a week. Sometimes it takes even a month at least, right? On the daily, because it's a longer time frame, and especially an RSI on the daily, right? Just combine those two factors together. They're both kind of, you know, longer time frames, right? So they take naturally longer to play out, but they're more substantial, right? And that's exactly what I foresee still happening, right? The RSI is still showing me signs of the bearish divergence, and I really don't see this getting better yet. Like I really don't see this playing out to the upside just yet. Again, I hate sounding like a bear. Believe me, I really want to just tell you guys, Tesla to the moon, man. We're going to bounce here. It's going to just fly and skyrocket up and we're all going to get rich. And, you know, I want to say that, but, like, you know, I'll just be lying to you. Like, I don't think that's going to happen yet. I do think it will happen later. I just don't think it'll happen yet. And I'm just saying it as I see it, right? But nonetheless, that's kind of what I see. I do think overall we're going to get that move to the downside, right? We have the Bollinger Bands right here that are actually tightening up. So that's interesting to note, actually, as you can see. We're actually kind of, you know, a little bit of sideways action here. Post earnings, you know, we are getting a bit of tightness on the Bollinger Bands, which again, once it explodes, assuming it continues getting tighter, that move will be pretty substantial for the most part, right? So keep that in mind. That is, of course, pretty important to remember as well. Now, going back to the 65-minute here very quickly, one thing that I still foresee happening, there is still potential, assuming tomorrow Tesla can close above the 21 EMA and the 267 level, there is still potential that this is nothing more than roughly a bear flag, something like this. Exactly what I just talked about on Disney, how we, you know, played out this bear flag and then collapsed back down, kind of similar to Tesla here, where, you know, technically this to me is still very possible, like something like this right here, right? I still think this is a possibility, right? As long as it doesn't fall out. So essentially, as long as Tesla is above 262, to me, the level it's still possible to actually rally up to you know, about 275, maybe even 280, right? That is still technically a possibility, but it needs to break one of these two levels first. Whichever one snaps first is the victor. If 267 snaps first, we get a short-term rally to 280, 275, 280. If 262-ish right here, 262 to 260, something like that snaps, then I do believe that this bear flag will continue playing out. And I think that's where we'll go to about 240. And I think from there, there's a potential that that is the bottom, but I think potentially also going to 220s is very possible as well. It's just, I'm not entirely sure for which one it'll be just yet, but keep that in mind, right? I think both of them are, you know, very real possibilities. So for instance, you know, if you go over to the 65-minute chart, actually, let's do it on the daily. We'll do it on the daily chart. It's a little easier, right? And again, as usual, right? Take the Fibonacci, swing low to the swing high, right? Boom, 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 right? First level, again, 245, which is pretty much that 240s level I just talked about. Very possible that that is where we bounce. The next level, of course, being the 0.5, which is the 220s. And the final level, which I do really think it should hold. Like, I'll be disappointed if it doesn't. And that's where things can really get bad if it doesn't, is, of course, around that 210-ish level, which is the 618 level on Fibonacci. Those are the most important levels to hold, right? I personally think we'll get into 220s, but I also will be continuing to buy the dip in the 240s once we do get there, which I do still believe we will. And of course, I will save powder for the levels down here if we do actually get there as well. But that's kind of the majority of what I am seeing right now. So let me know what you guys think down below. Another thing to note, and that's kind of interesting actually, is if I open up this other data right here and open up the short volume at the very bottom, you can see the short volume is apparently actually dropping on Tesla, which is kind of interesting. As Tesla's kind of doing this sideways action, the short volume has actually been going kind of down. Maybe people are exiting their shorts after this massive, fall from earnings, right? That could be the signal, the reason behind that. But just thought I'd point that out there. The short volume is kind of dropping. The options chain, I took a look at it right before I recorded this video. Nothing too completely crazy. There is one thing that's a little interesting, I guess, if we open it up and reduce this premium to around, or increase rather the premium to around, let's say 85-ish, reduce the strike price to somewhere around here, right? You can see massive red bubble over here, right? 3 million in premium of 280 puts expiring July 20th. Wait, that's expired already. 28th of July, which is actually in just this Friday. So, people are maybe still betting on further downside following, maybe this FOMC meeting. But if we continue to extend this out all the way over here, you can see there is a pretty massive put over here at 2.1 million premium sitting on 19th of December of 2025. Could just be a massive hedge. Who knows for sure what this is? But, just thought I'd point that out. Oh, you can't even see it. So let me go ahead and move my camera all the way down here, right? So, take that as you will, of course. Take that as you will. Thought I'd just kind of mention that as extra information in case you were curious. But that's kind of the main stuff I'm seeing right now, ladies and gentlemen. There's not that much more to talk about. I mean, we have the 50-day moving average is actually sitting at a support at 240 right now on the daily. Again, 240 I think is a phenomenal level. I definitely think that there is a possibility 240 is the bottom. I just think that there's also a very real possibility we'll go even lower, but I do think that we'll see at least the 240s, right? Moving over to, let's say, where else is there? We can take a look at... I don't have the 200-day right here. 200-day moving average is sitting all the way down at 193. I don't think we'll go that low. It's not impossible. I don't think we'll go that low personally, and I do think this will slowly start catching up to us as we kind of play out what we're about to play out right here. Kind of go sideways, a little bit of a drop, 240, maybe 220s or 210s. And I think that 200 moving average will slowly start playing catch up to us overall. But ultimately, it's a simple way to look at it. We came up, massive rally, retested this massive red trend line, got rejected. So far, we're playing out to the downside, and we haven't really retested anything as we continued rallying, which usually is pretty it's an unlikely scenario. Usually, you retest breakouts like that. We haven't retested them, and I'm personally waiting for a retest. Again, very possible that we retest this blue line around 210. So keep that in mind. But that's kind of what I am seeing right now. So let me know what you guys think down below. Thank you so much for watching. If you enjoyed, don't forget to hit that like button, and I'll see you tomorrow. Peace.